Hello guys, I just thought I'd do a recap of AU and AU for London session as it was a pretty interesting price action this morning. There was no trades for me personally, but there's a lot to be learned from sort of the price action and how it played out. So I will go through it for you. So hopefully some people might take some value from it. On the daily on AU this morning, I said before that my expectation is that ultimately it'll be sort of something like this here to mitigate this supply in the premium. But coming into session this morning, we had wicked this high, sort of the internal high. So it's going to be a decent amount of liquidity behind that. Sort of early sellers coming into the market trying to push the market to the downside and catch the next daily leg. So it's no surprise that we sort of have seen a bit of a pullback after that. So this morning, I was aware that there might be a pullback in sort of the 4 hour and M15. So I was definitely not ruling out looking for sells, but ultimately I do think the daily will push up and sort of mitigate this here. On the 4 hour, we had a bullish IBOS where basically we got the close above the previous internal high. So this gave us this demand range to trade within. Obviously, all of this supply is sort of mitigated within the leg, and it's a pretty corrective push up overall. You can see that sort of pulled back in, mitigated this, pushed up, just about broke the high, pulled back, mitigated this, and then same again, sort of pushed up, and then this was mitigated with this minor inside bar, and again, sort of this inside bar was mitigated with the next candle. It was a very corrective move up, so this wasn't filling me with much confidence that price is going to rocket to the upside from here. So we were sitting in this demand here that led directly to the IBOS this morning, so I was interested to see whether we would continue higher or whether this might basically flip the supply and give us sort of a pullback to play, which again makes sense following sort of sweep of the daily internal high, sorry. So we sort of have that 4 hour flip zone now that caused the bearish shock, so price might pull back into here and then we might push down during New York maybe to mitigate that wick. Sort of makes sense as only the very top of the candle was mitigated. But yeah, coming into London, I was sort of happy enough to sit my hands and see which way the market wanted to go. We could have continued higher, but as there wasn't that much bullish momentum in the market, sort of suggested bulls were running out of steam. So I was waiting to see if we got sort of signs of bearish intent in the M15 or the 4 hour, obviously the bearish 4 hour shock did, to sort of play a bearish pullback maybe towards like this sort of the AQ of this sort of internal leg. It sort of makes sense. Obviously that lines up quite nicely with that wick. So we'll see what happens out in New York on the M15 then. Coming to the desk this morning, we're basically, well, first of all, I'll cover this here. I originally had this here marked on as a swing high, and this was my swing low, but then I just changed it because I was just, as price is coming down, I was just sort of looking at it. If this low got taken out and we got a close below, which we eventually did, is like, would I view the M15 as being bearish? And to be honest, no, I wouldn't. I would still sort of view this here as the major swing. So I just sort of changed that. But again, if you want to keep it completely mechanical, the Pippers, whatever, you can view that as a swing pullback. So the M15 would be bearish swing structure for you now. But had this bearish IBOS, and basically this demand was pretty clear. It flipped this supply and it led to the most recent bullish IBOS, so the expectation would have been the price would basically pull back in here and then continue higher. You can see we got the reaction, prices sort of range sideways, and then the reaction failed. Then we got the bearish IBOS. So at this point, we got the bearish IBOS. I was basically looking to see if price would pull back into sort of this supply. It was the obvious one, and then continue lower. But obviously, when you've that much momentum to the downside, it's less likely to pull back. So it didn't really get any sells. I know some of you were looking at like buys within these sort of demands. The way I was sort of viewing that is basically it was already mitigated in my eyes. So you have a lot of momentum to the downside. These sort of demand zones are already mitigated. So so there probably still is orders within them, but it's unlikely it's going to be enough to sort of cause a next leg to the upside, particularly after the bearish IBOS and the clear flip here. So personally, the one demand that I have my eye on for potentially a buy was this one here, because you can see it ticks a lot of the boxes. The swap liquidity, sort of in multiple places, swap that low. So this was sort of the one where I was maybe looking for an M1 entry. Swept liquidity there, clear equal lows in front of it for inducement. So I knew it was very likely we would get a decent reaction from here. So I was looking for potentially an M1 entry in there, but when there's this much momentum on the downside, it's like you can see we clearly reacted to some supply within there, failed to follow through. So this is essentially your flip zone. So the one thing, when there's a lot of momentum to the downside like this, the one thing you want to be super careful of is trading directly into M15 supply on the M1. So while I was aware that this could give a decent reaction, and I was happy to look for an M1 entry within it, I was super cautious about trading in any M15 supply, and ideally what I would have liked to have seen is basically the order flow shift. So you can see like we have this huge momentum, demand failing, supply holding. So basically what I like to see in an M15 chalk, or like this reaction to fail. So like sort of once we get the chalk and then we have this sort of flip zone, then I would sort of have more confidence in looking for longs. But there was a potential entry on the M1 here. See, we come in, swept the clear equal lows, so very clean. For that reason, when you sweep something clear like that, you don't necessarily need that clear of a liquidation in the entry model. So like, see, we sort of swept that very minor low. If there was no inducement, I wouldn't count that as a sweep. But I can see we sort of swept these lows as well, so there's a bit of a liquidation there. That's not a flip as it wicked the high, so it's not technically a flip. But you can see come into the M15 POI, clear V-shaped recovery, and then sort of have this pullback, which is a pretty significant pullback in the M1. And then we pushed up, so that was a valid entry, and again you could argue that was valid as well, but basically we had mitigated this M15 supply. So for that reason, basically I wasn't interested in looking to buy here at this point, because a lot of momentum to the downside. I would have ideally liked to see this supply fail and then a bullish M15 shock. So this is like, yeah, technically the M15 was bullish, as a high probability POI, but when there's a lot of momentum to the downside, you just don't want to be trading against on the M15, which is ultimately why this failed, and then obviously this held. But again, you're trading against the M15, that's not something I'd be interested in. Now, had price come in here and say, got the nice entry model, say flip, chalk, and then get in there. If say that entry model there set up where you can enter in the flip, it's a pretty clean entry model, then I would have taken it as long as I could get my stop to break even before coming in here, because then that's the most important thing, is just once you can get your risk off by the time you come in here, that's sort of when you can trade against the M15. But then once it mitigated it here, it's too aggressive to be trading against that, considering how the M15 was looking. But yeah, that was pretty much it. Obviously would have liked to have got involved in the sell following the bearish eyeball, so there's nothing really clear. And then would have considered a buy in the M1 within here, as long as I could have got it to break even before we mitigate the M15 supply here, but nothing set up. And then sort of before looking to get long, I pretty much just want to see, it looks now like that's the chalk line there. It looks like coming in New York, basically we're going to maybe get the bullish chalk, and then sort of we'll have this pretty clean M15 demand to trade from that basically caused this failed reaction as well, if we get a close above it. So provided we get a close above it, that will be sort of what I'm looking for to get long. Yeah, and then obviously you have to be aware that overall the internal is still bearish. We've had the 4 hour chalk, so we have this sort of M15 supply nest within 4 hour supply, so you have to be sort of careful, wary of in theory this week M15 low should go, but as the internal is bearish, we could just sort of come in here and then roll over the downside and continue a more complex pullback. But that's sort of where you have to remain neutral. So coming in New York, you look for sells from here, and then sort of potentially look for buys from here if you get the sort of flip and chalk. But that was EU, no entries for me, and then wasn't really a fan of trying to trade in there because of the momentum, and sort of the POIs are already mitigated, and then this was sort of the clear POI for me, and just didn't get an M1 entry before we mitigated the M15 supply, so I was happy to leave it alone. AU then, AU's at an interesting junction because we've obviously had the break of structure, we've had this pullback. Now this is my protected internal high, because that was sort of the most recent IBOS for me. So this is a pretty significant supply because it's obviously in front of the low, or in front of the protected high. It's in the premium. You can see sort of the push up in was very corrective, sort of, price was sort of breaking the high, pulling back. There was no sign of any clear bullish momentum there, and then sort of coming to New York, coming into London this morning, sort of had a pretty strong daily retrace. Now obviously it's very early in the day, I don't know how that's going to close, but it is a bullish sign. You have to sort of take the candle at what it is at the time. So it's very possible we could roll over the downside from here because we've mitigated the EQ. We've hit supply in the premium, so it wouldn't surprise me if we were to roll over the downside from here. So that's sort of governed my thinking on the 4R and the M15 as well. Sort of, we are, we could continue higher, but there is a good chance we could roll over from here. On the 4R, we basically mitigated this 4-hour wick at the extreme of the daily supply, which again is obviously another bearish confidence factor. Then we had this bearish shock, which again, it's not as convincing as an IBOS or a boss, but it still is a sign of bearish intent. So we had this sort of fresh supply to trade from, sort of, I think, coming into London here. I was waiting to see maybe we might get a pullback into here and then maybe look for shorts to at least target this demand. We just sort of kept tanking and came into this demand. Now this demand, it's at the extreme of the 4-hour range. 4-hour is still technically bullish. It's swept liquidity. So we could easily continue bullish from here, but just sort of knowing where we are sitting on the daily, that this is basically the daily protected internal high, it would not be at all surprising if we basically rolled over to the downside from here. So it's happy to sort of look for sells from here and buys from here, sort of depending on what's set up, and but sort of being aware of sort of the higher time frame intentions, more so in relation to how I manage the trades. Like, I wouldn't, if I got in long here, I wouldn't swing for the fences and think, oh yeah, well, this high has to go because it's 4 hours bullish. I would say, oh well, the M15, we've mitigated the daily supply, so the daily trend might take over. So it's just sort of knowing about how far you can push the positions management wise. On the M15 then, had the pretty clear, sort of coming into London. So around here, 6:45. So we're sitting around here. We'd had the bearish IBOS, so pretty clear, a lot of momentum. So at this point, I was waiting to see will we pull back into ideally one of these here, nested within the 4-hour, or even these sell to buy or buy to sell wicks, because obviously it's a flip zone and it's within the prior range. So while not the highest probability POI, sort of when you have a lot of momentum to the downside and it's coming into London, so volume's going to take up. I thought maybe we might pull back in here and then get an entry to potentially target the 4-hour demand at a minimum. But I was also potentially looking for buys sort of within this 4-hour demand, because at the end of the day, buys are pro M15 swing and 4-hour swing. I wasn't the biggest fan of this POI. It's valid because obviously it flipped that sort of inside bar and it did lead to a break of structure, but no inducement. It's just wide open space in front of it, and then it obviously didn't sweep liquidity because it's only wicks, so I'll usually have these drawn on and keep an eye on them. But for me to take that, I would want to see like the absolute picture perfect entry model, where you get the clear liquidation, where there's sort of equal low swept in the M1 V-shaped chalk flip. I would want to be super conservative there. This isn't sort of POI you want to be aggressive with. Again, let's play price on. Obviously, we got a bit of a reaction to this demand, nothing major, and then sort of it flipped. I don't think there was any entries on the M1 within that. See, mitigated here. Yeah, that's where chalks can get you in a lot of trouble, because that was technically a chalk. So technically, you could have, you had the structure shift and you could have entered there, but again, you had the sweep as well. You could have entered there, but like when you zoom out and just focus, like it's quite clear that's a swing, that's the push down. So what have I ideally like to see basically that flip and then sort of get a more of a break of structure than just a straight chalk. But as I say, I wasn't the biggest fan of the POI anyway, so wouldn't have just taken a straight chalk there. Would have wanted to see like say if price just sort of ranged sideways a bit here and then got another V shape, then I might have considered entering on the flip or the extreme, depending on what the flip looked like. But yeah, that's just a straight chalk. It's too aggressive given the overall POI. Then basically blasted on down through, and then came into the extreme. I like the extreme. Obviously, the extreme's always good. It's pro 4 hour and M15, nested within 4 hour and M15 demand. But again, absolutely no inducement. Wide open space. So what I wanted to see, something very clear in the M1 again, sort of the clear entry model. You can see here, this is sort of the minor details that can save you from a lot of losses, because you come into the demand, then sort of got the pause, which is your inside bar, and then it failed, got the close below, so then that's technically M15 supply. So it's not something you might want to trade, but it is still valid M15 supply because it is technically a flip. Then same again, sort of pull back here, mitigated the M15 supply, push down, so then that's more M15 supply. So then this is where, at this point, I was just waiting for a clear shift on the M15, basically where you would see one of these supply fail and or an M15 shock to sort of look to get along, because that would sort of be your signal that things have changed the M15, because like you just have to look at the sheer amount of momentum to the downside, and then bearing in mind where we are on the 4 hour and M15, you know, or the 4 hour and the daily, where the daily pullback might be complete. We've had a bearish 4 hour shock from the 4 hour extreme in the daily, so it will be no surprise for the M15 to switch bearish here, so you don't really want to force it in here, even though it is pro trend. So the safest thing is just to wait for basically the order flow to shift, basically where you say you get the reaction to supply, reaction fails, and then that's sort of your flip zone. And then whenever you get this here, then you can start looking to get long, and then that's whenever you're trading pro order flow and structure, and that's when you can potentially target the weak high. But sort of it's about, whenever conditions like this, it's easy. It's just about having sort of the confidence in your analysis to sort of sit in your hands and wait for something clear, rather than sort of having the chronic fear of the market leaving without you and you missing out on something. Like, in theory, the market could just reverse from here, but it's like when you see that amount of momentum, and then it's very unlikely you're just going to get a straight V shape back up there. So I wouldn't really be too worried about missing out on anything from there. And then in the M1, as what I was saying about the M15, again, this is valid, mitigated sort of this huge wick within the M15 POI. See, like, clear wick, it sort of took out all those sort of POIs there, so it's swapped liquidity. Came in there, and then you can see the entry model in isolation is pretty clean. Had this sort of liquidation, so again, when there's no inducement, that's sort of a pretty clear liquidation. Like, you can see sort of retail traders getting taken out of the market. Then sort of came down, V shape, pullback, flip, and then V shape, shock. And then obviously that is a valid entry model. You can enter there if you want, but the issue is we sort of mitigated the 15-minute inside bar where price had sort of reacted to the supply, or the demand, sorry, and then failed. We got the close below, so that gave us the valid demand. So you're trading against the supply. And then again, same thing here, push down. Again, you can view this as liquidation. So multiple liquidations now, V shape, and then you can see V-shape recovery chocks, and again, you could have entered there if you want to take a straight chock, or you could have waited for sort of the flip, basically where you get the failed reaction V-shape. That's your failed reaction above, so you could have entered in the EQ there. But again, you're trading directly in the M15 supply, so this is where it's easy to get absolutely destroyed in the markets, is when you're thinking, right, this is pro M15 4 hour, you know, in M15 4 hour demand, makes sense, but then it's like you're sort of taking, they're clean entry models in isolation, but when you've that much momentum to the downside and sort of, you know, demand is failing, supply is sort of forming, you just don't want to be trading into on in the M15. Like, again, if I could get along here and get to break even before here, then yeah, I would consider taking it because it might be worth the risk. But it's like when it tags the M15 supply before coming back to entry, it's just too risky, and like, they can play out, and maybe it's something you want to take yourself, but it's just too risky for me, because it's where you're going to take an absolute, like, you know, judging by this price action spawn, you know, you could easily have taken, like, even you could have technically counted that there as an entry where you had the chalk and sort of V-shape. It's like you could have very easily taken 3 or 4 hits coming into this M15 POI, because you're just thinking that, oh well, it's pro 4 hour and M15 and M15 demand, so it's sort of just like understanding what you're trading against. And then when you have that amount of momentum on the downside, the safest thing is just wait for basically the order flow to shift bullish again, and then just trade in line with that. It's like that's always where the easiest trades are. That's your strike rate's going to be the highest. That's where trading basically feels effortless, where it feels as though you're getting in at the top and sort of getting out at the bottom every time, sort of taking profits at 10 or at the low or whatever. But yeah, no trades for me, but it was pretty interesting price action, sort of how it formed. So I would encourage you to study it and sort of try and learn from it, because I know from like when I was sort of learning the strategy, these are sort of the scenarios where it's very easy to take a lot of hits, and then you sort of, it's like, again, it's protecting your mental capital as much as your financial capital, because if you take 4 or 5 hits and you're thinking, oh, it's Pro 4 or Pro M15, and you can't really understand it, it's sort of, you lose faith in the strategy subconsciously, and it affects your performance going forward. You subconsciously sort of write off positions because you think the strategy doesn't work anymore. So it's important in these sort of situations to sort of recognize when it's best to sit in your hands and sort of wait for the market to tell you that it sort of wants to go higher. But that's it anyway, guys. I hope you took a bit of value from that, and if you have any questions about it, just drop a question in one of the channels in Discord and I will get back to you. Thanks, guys.